Hello and thanks for watching my short video. What I'm trying to show here is a method that I have been using lately, and it seems to generate some nice pips. It's based on what I call an engulfing bar, and I suppose, as most know, an engulfing bar can indicate a trend reversal. And on this time frame, which is the Euro USD daily time frame, I have deliberately picked a flat trend, and the Euro USD seems to be not in any great trend at the moment. So just to show you how this method works, as I said, it uses engulfing bars, and what I call an engulfing bar is one where the open and the close of the bar is greater than the open and close of the previous bar. For example, this one, and this one, and this one. I'm sure you can see, you get the idea. This one. So on the daily time frame, what I do is identify all of those bars by highlighting the high and low of the bar and putting on an arrow just to indicate the direction of a possible order. So what I've done is gone through all of the engulfing bars for this period between 17th of April and 14th of June, a couple of months, and highlighted the bar with the possible direction of the trade. As you can see, the engulfing bars are marked with the little arrows. Having done that, it moved to the 4-hourly time frame. Just zoom out of it, and you can see that the first one we come to, what I look for is, because it's in this, we're looking for a trade in the downward direction. I look for a 4-hourly bar to close below this support point in the daily bar. So as you can see, there was no close below, therefore no trade. Moving to the next one, the blue rectangle is obviously the 4-hourly bars, which is 24-hour period, and there is an H4 close above the level of resistance point of the daily here, and that would be your entry point. Now your take profit point would be the distance from the entry point to the bottom of your daily, which is in the region of 59 pips, and as you can see, we would reach that round about here. It's a risk to reward ratio of 1:1, but you have the daily engulfing and the H4 close momentum to carry you through. Going to the next one, you can see that there was no close for quite some time below the support area of the daily engulfing bar until this point. So this is your entry point. Stop loss would be 202, 203 pips, and here we are in this region. Take profit down at this level. Next one, you can see that there was a close an H4 close here below your stop loss is back at the high of the daily engulfing, around about 179 pips, 180 pips. Here we have it, round about here. Take profit. Next one, you can see that there's an H4 close here. Stop loss is 129 pips away, and it only got to around about 104. Therefore, this would have been a losing trade. There are losses, but you come to expect in any method that you trade. There is obviously no trade here because there's no H4 close below. We're looking for a close above this area, and we have it here. Stop loss is 97, 98. And we have this take profit in this area. It almost came back to hit your stop loss, but not quite. That was a lucky escape. There's no trade this day, and there's a trade here. This is the H4 close above the resistance point of the daily engulfing, and the stop loss is in the region of 136 pips, and that would happen. The take profit would be right about here. The next bar, around about 49.50, and here we have the take profit down here. This day we have an H4 close here, 146 stop loss, 146 take profit. Here we have an H4 close, 168 pips, and there we have a take profit. And just one more. H4 close above the daily engulfing, 98, 99 pips. There we go. So I hope you see the idea behind this method, and that it can work if we wait for the H4 close beyond the daily engulfing resistance or support. Hope that makes sense, and I hope you get some good pips. See you later.